Wall Street closes higher on Friday as the Dow Jones hits a lifetime high following an in-line PCE inflation print. The Asian markets have opened mixed while the gift Nifty is suggesting a slightly higher start for the Indian markets. Crude prices continue to correct with Brent falling to around $76 a barrel on expectations of lower demand from China and the United States. Gold is trading around $25–30 an ounce. India's first quarter GDP slows to a 15-month low of 6.7%, but it's largely in line with estimates. Despite the slowdown, India remains the fastest growing major economy in the world. Market regulator SEBI revises threshold for stocks entering or exiting the F&O segment. Median quarter Sigma order rise is increased to 75 lakh rupees from 25 lakh earlier. The market-wide position limit is also revised to 1,500 crore from 500 crore rupees earlier, while the average daily value over the last 6 months is hiked to 35 crore from 10 crore earlier. And in a major restructuring exercise, the Gujarat State Petroleum Corporation, Gujarat State Petronet and GSPC Energy will merge into Gujarat Gas. Gujarat Gas's gas transmission business will also be carved out and be listed as GSPL Transmission. It's the start of a new week. It's the start of a new month as well. And there is a lot to catch up on. And you're watching Power Breakfast on CNBC-TV18 in the Mumbai News Center. I am Hormuz Fatakia this Monday morning. Let's first take a look at how the Asian markets are faring. It's a mixed start across the Asia Pacific. While some of the indices are underperforming today, the gains are coming in from the Japanese markets. And the Hang Seng is the underperformer across the Asia Pacific this morning, trading with losses of over 1%. The Taiwanese index, though, trades above the flat line and is trading with gains of around 0.3%. The Japanese markets are also trading with gains. The Nikkei is up around 0.4%. The Shanghai Composite, though, has opened lower. It's down 0.3%, and the South Korean indices are trading exactly at the flat line. So underperformance coming in from the Hang Seng, but gains coming in from Japan and Taiwan. Pull up the gift Nifty as well, and that will give you a picture of how the Indian markets are likely to open. The implied open is suggesting a subdued start for our own markets, where we are coming on the back of a 12-day rally on the Nifty. So the question remains, will this rally continue into the 13th day as we begin a new month as well? But Friday's trading session on Wall Street was a positive one, with the S&P 500 advancing over 1%. The tech-heavy Nasdaq also gained a similar quantum, and the Dow Jones jumped over 200 points, touching a fresh all-time high in the final and closing at another record. Now, the PCE, the Producer Core Price Index, rose around 0.2% on a monthly basis in July and 2.5% from a year ago, which is in line with estimates, while excluding food and energy, inflation rose 0.2% from the prior month. Now, let's listen in to some reactions on July's PCE inflation report and its outlook on the Fed's inflation fight, the rate path, and more.
This was a good report, right on track with what markets were expecting. This will put the Fed squarely on rate cut in September. And I think it's going to be 25 basis points. And I think the debate now will shift out to the November-December meeting, and I think the baseline there is 25 basis points at each of those meetings as well. And it is a soft landing, and I think it has been achieved. I think Jay Powell's speech at Jackson Hole was essentially recapping the success of monetary policy over the last 2 years.
Well, right now, I would say 25 is the most likely outcome. We'll see what the employment numbers are like before the meeting. We've yet to see that shoe drop, and the inflation numbers are proceeding. I thought Powell was circumspect in his comments, although he indicated clearly where they want to go. The question, I'm talking about his comments out of Jackson Hole. And we'll just have to see. The market has been forecasting rate cuts going back to the original idea of possibly 6 cuts this year. And now you've got, of course, recession. We've been talking about it forever. It's not happening. It's happening in the manufacturing sector, no question. So we'll just have to wait and see. But I think the Fed has to be careful not to indicate any kind of sense of urgency or panic. And they have to continue on their deliberate course.
That's all we have in the global market front. But how will all of these cues from Friday and across the weekend impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news, and of course the F&O side of things as well. First up, Vivek is in to get in all the market cues that you need to watch out for today. Vivek, good morning. It's a positive handover from Wall Street, but what's the setup looking like?
Well, good morning. Equity markets worldwide did very well in August, despite the fact that there was quite a lot of volatility. Like you mentioned, U.S. markets, actually ended August on a 4-month winning spree. And on the other hand, in further positive news flow, oil prices actually ended August on a 2-month losing spree. Seeing further decline as well. Now, Indian markets, you saw something that's never happened before in the last 30 years. Indian markets continued their rally on Friday, 12 straight sessions of gains, first time in over 3 decades. What actually did well in the week gone by? Pharma, IT, metals, all of them did well. Pharma index hit a fresh record high. Along with that, if you're talking about the advanced decline ratio, again, very, very strong. 3:2 is the kind of advanced decline ratio that we saw as far as the markets were concerned. Remember, Friday was a high impact net inflow event, a high liquidity event for Indian markets. Friday, you saw over $5 billion of inflows, HDFC Bank amongst them, taking in most amount of inflows of almost $1.5 billion. What is it that we'll be watching out for today? Number one, can the rally sustain after 12 straight sessions? Number two, remember, auto sales have come in over the weekend. It'll be interesting to see how stocks react to that. And Asian markets as well as GIFT Nifty both indicating a flat to positive start for our own markets.
Vivek, thanks a lot for that update. Over to Sudarshan now, who will highlight most of the auto sales that Vivek was highlighting, among other stocks that you need to watch out for today. Sudarshan, good morning.
Morning, Harma. So we'll start with all the auto companies have reported monthly sales for the August month. First, starting with Maruti Suzuki, sales were in line with estimates at 1.82 lakh units, but were down 4% year-on-year, while up 1% month-on-month. Tata Motors, total sales have missed estimates, dragged majorly by commercial vehicle segment. Total sales were down 8% year-on-year, but flat month-on-month. TVS Motor, it was a strong monthly sales, except three-wheeler. All segments have reported double-digit growth. Total sales were up 13% year-on-year and up 11% month-on-month. Hero MotoCorp, like TVS MotoCorp, again strong monthly sales. Total sales were up 5% year-on-year and 38% month-on-month. Even outlook is positive here. Company says August sales were marginally impacted by supply shortages, but will be made up in September. Eicher Motors, Royal Enfield sales were in line to muted expectations. Total sales were down 5% year-on-year and up 10% month-on-month. Also, company has launched 2024 Royal Enfield Classic 350 and starting price is rupees 2 lakh. Keep an eye on GSPL and Gujarat Gas. Board has approved scheme of arrangement. GSPL, GSPC and GSPC Energy will be merged into Gujarat Gas, and later on Gujarat Gas Transmission will be demerged from Gujarat Gas, and swap ratio is 10 shares of Gujarat Gas will be given for 305 held in GSPC. Second, 10 shares of Gujarat Gas will be given for 13 shares held in GSPL, and after demerger, 1 share of Gujarat Transmission to be given for every 3 shares held in Gujarat Gas. Next is MOIL has cut prices by 15 to 20% for its different product grades effective September 1. Biocon has got US FDA approval for Genic and Trasto, which is used to treat heart failure. Century Textiles to develop a land parcel of 131 acres of Noida with Lotus Green Group. NBCC board has approved bonus issue. And last is SJBN, NHPC and Railtel. Government has upgraded these companies to Navratna status.
PSUs will be the ones to watch out for today. Sudarshan, thanks a lot for that. But stay on because you also have cues from the F&O space. Tell us more on that.
Well, record run for market continues. Nifty is closed at record high for 4th straight session, and the gaining streak that we have seen is the longest in last 31 years, that is since 1993. For today, GIFT Nifty is indicating a start near flatline. If you talk about the performance of market in the last 1 month, all the major indices have seen gains for 3rd consecutive months, and especially since election result, Nifty is up almost 12%. Talking about institutional activities, we have seen buying by FIs of almost more than rupees 5,000 crore, while DIs have sold nearly rupees 3,200 crore. And these high figures mainly because of MSCI impact that we saw on Friday. Coming to index futures, here also net buy figure for FIs was more than rupees 2,200 crore. Talking about the net long contracts, we have seen addition of more than 2.4 lakh, and with this, long exposure has increased to 72% again, which is highest in almost 1 month. Coming to option side, 25,300 call has seen addition of more than 10 lakh shares with premium at almost 120, and on the put side, 25,200 put has seen addition of more than 32 lakh shares with premium at 80. And with these support levels for Nifty, support is seen somewhere around 25,160 to 25,220, and resistance is now moved higher to 25,270 to 25,300. And lastly, stocks in focus, we have one stock in band, that is Balrampur Chini.
Sudarshan, thanks a lot for that update from the FNO side as well. That's all the market setup we have. Time for a short break. Up next, we get you some important macro updates from Friday as well as cues from the commodity space. Stay tuned, back on the other side. Welcome back. On to some important macro updates. Then the first quarter GDP growth came in at 6.7%, which is only a tad below the CNBC-TV18 poll of 6.8%, but a full percentage point below the fourth quarter of last year when the GDP growth was 7.8%. Lata Venkatesh is joining in with the editor's take. Lata, good morning. How are the numbers?
Well, first I want to dispel a wrong notion that's going on that the GDP growth is the slowest in 5 quarters. That is a mistaken way of looking at it, because GDP is not the best indicator in this specific instance. And I'll tell you why. It is getting distorted by subsidies. What the NSO actually calculates is the GVA, the gross value add done by all segments of the economy. To the GVA, the NSO adds taxes and subtracts subsidies. Now, 2 years ago, FY23 subsidies was very high. And when that got subtracted, the FY23 GDP went down. FY24, the subsidies were reduced. So that much subsidies was not subtracted. So the number looked very big in FY24. FY25, everything is normal. So compared to FY24, the GDP number looks smaller, but it's only a base effect. So let us concentrate on GVA, because there all this subsidy distortion doesn't come. If you look at the GVA number, it is 6.8%, actually higher than the 6.7, which the GDP number is. So GVA is 6.8, good number, compared to actually 6.3 in the fourth quarter of last year, that is Jan, Feb, March. So if anything, the economy is growing at a faster clip. So nothing to worry over there. In fact, in the internals, I would say that there are a lot of positive. The main one being the recovery of private consumption. Private consumption, if you took an average of all the last 4 quarters of FY24, then it was only growing at 4%, which was a worry. You know, when GDP is growing at 7 to 8%, consumption growing at 4% was a worry. Rural consumption was a big worry. This time, the first quarter, it is 7.5%. So clear rural recovery seems to be reflected in the number. And the other one is capital formation, what you call gross fixed capital formation, GFCF. That was doing very well. But there was a worry that in this month, April, May, June, it may fall because the government capex was very low. If you looked at the fiscal numbers, the government capex was 35% lower than a year ago. So we were all prepared for a bad number. Actually turned out good, 7.5, which means what? Probably private capex has picked up. So both those indications are positive. There is also another entry called public administration, defense and other services. Even over there, public administration, government would have been bad. But it is the other services, education and health, which probably have done well. That number is also grown by 9.5%, which must indicate that private sector services have done well. So what's negative? The negative, according to me, is 2 things. Agriculture is a very, employment intensive, and next to it is something you call trade, hotels, transport, communication and broadcasting. That's a fairly heavy informal sector. All the restaurants and Udupi hotels are in that category. That's grown by only 5.7%. So 2 employment heavy sectors, agri growing by only 2%, is a bit of a worry, which means this K-shaped recovery seems to be, persisting. But the important takeaway would be that the growth is robust, only it is not as good as the 7% plus which the Reserve Bank is forecasting. Reserve Bank is forecasting 7.2 for the full year. It is more likely it will be 7% minus by the time the end of the year if these trends persist.
Interesting. Thanks a lot, Lata, for that breakdown of the GDP numbers that came in on Friday. Now, the broad momentum of the economy remains intact, and that's the word coming in from the Chief Economic Advisor, V. Anantha Nageswaran. He spoke at the CNBC-TV18 Banking Transformation Summit and also said that the slowdown in the first quarter growth was anticipated due to slower capex and the lack of government spending due to the elections. Listen in.
I think the broad momentum of the economy remains very intact, and I think we do expect that with the monsoon having been good so far, hopefully it doesn't turn out to be too much of a good thing. I think we can look forward to gradual improvement in the GDP prints in the coming quarters.
The chief economic advisor also said that the Indian banking system needs to tailor approaches to the Indian context. Now, he added that the moderation in terms of growth and credit culture will stand India in good stead. Listen in.
I think the Indian banking system as a whole, that includes the industry participants, the regulators, etc., need to tailor their approaches to the Indian context. We need to be aware that some of the principles and practices we import from overseas may not necessarily suit the context of a developing country where many small and medium enterprises still do lack access to finance. I think one important behavioral aspect that the industry has to keep in mind is moderation in terms of growth and in terms of credit culture will stand India in good stead, and also ensuring that whatever we do, we tailor it to the Indian context and the fact that we are a low-income aspirational country wanting to become a middle-income status. We need to sustain our growth rates, whether it is economic growth or credit growth. So whatever that needs to be done to sustain them, and that includes delayed gratification on the part of the banking industry and the non-banking industry, those would be my ideas or priorities for the banking industry for the medium term.
The chief economic advisor there. Now, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil prices continue to drop. What are you picking up this morning?
Oh, well, absolutely. The month of August has seen a decline yet again for the crude oil prices, the second straight month, by the way. The prices did decline 1.5% on Friday. So for the month of September, as with the first day today, we've seen a bit of a chip-chop movement coming in here. Well, markets will watch out for the fact that the 8 OPEC and allied companies will now start increasing supplies from the month of October, and this is by 180,000 barrels per day. So this is the statement that would come in this week itself from OPEC and allies from their meeting is what is going to be of importance. The other thing is that the China manufacturing activity has continued to decline. It has sunk to a 6-month lows in the month of August, continues to weigh onto the market. It is all also going to be about the US Fed rate cut, where there is now a higher possibility of a 25 basis point rate cut rather than a 50, and that really seems to be letting markets adjust to this new expectation. Not just crude oil prices, we've seen decline come in for gold and silver as well. For the last week, it has been on a negative note. For the month of August, of course, gold and silver both have been on the positive side. The markets are looking at not just the traditional ways of buying gold, but the technology and the solar industry demand for silver and gold also has been on the positive side. When it comes to the metal space, well, August has been on a positive note. We've seen copper prices gain up by 2%. Aluminum, zinc, steel are up anywhere between 8 to 12% for the month of August. And with that, we've turned positive for the year 2024 as well. But as the month of September starts, I think all eyes are going to be on the US Fed, the rate cut, the guidance forward. And until then, no large positions are expected to be created in many of these industrial commodities.
Manisha, thanks a lot for that update. We'll keep an eye out on all of these commodity cues as well. Time for a short break. Up next, the market regulator SEBI has revised thresholds for stocks entering and exiting the F&O segment. We get you all the details on the other side. Stay tuned. Welcome back. Now moving on to some important updates on the global front. Now massive protests swept over Israel after the death of 6 hostages in Gaza. Now this comes as frustration mounts over the country's leaders to secure a ceasefire deal and free Israeli captives. Officials estimate that at least a third of the remaining 101 Israeli hostages have also died. Now Israeli Prime Minister Benjamin Netanyahu has said that Israel would not rest until it catches those responsible for the killing of 6 hostages. Meanwhile, Israel continues to strike Palestinians in Gaza. The Palestinian health officials confirmed that nearly 50 people were killed in the latest attacks on Gaza. That's all we have on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.